Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Good morning, everybody. Cowboy here. And wow, something must have just hit the news unexpectedly because I'm going to flip over to USD JPY. I had a I had a trade on and it just knocked down out of nowhere. Look at this on the low time frame. Interesting. I don't know what just happened. We're in a wild time right now, that's for sure. A lot of stuff going on in the news that's not expected. Oh, well, maybe that might be the problem. Son of a gun. I had the time zone wrong, so that's a shame on my Forex factory. So my time zone was all screwed up. So I thought that the data wasn't coming out until a few hours from now, and then the data came out and knocked me out of my trade. I guess that's just what happens when you're forced to reset your entire computer system, and all your stuff is all knocked out of whack. That's disappointing. Let's go here. Delete that. Give me 1 second. All right, we'll explain that later. All right, good. So Bitcoin is calming down. How do we say this? Bitcoin is basically tightening up. Okay, it's coiling up. So um, the best way to explain that is that as Bitcoin goes a little bit weakly to the right here, as it kind of just is flowing to the right, trying to decide which way it's going to go on a higher time frame because it doesn't really know right now, right? The volatility is starting to wear off, and that's very evident in you seeing that this is kind of tightening up. This little move to the right, the ups and downs are starting to get a little bit tighter here, right? So it's not quite a triangle. It really is more of like a channel, more or less. It's not pretty, I can tell you that, but you see it kind of just tightening up a little bit. It's ugly, that's for sure. But it's essentially a downward channel. But it's starting to get a little tighter as you get to the right. And I had predicted price heading a little deeper a little sooner, right? So that didn't happen. Got held up. I think everything got really quiet, and CPI was that was not as expected, or at least it was. But the way that the market reacted to CPI was, in my opinion, a little milder than expected. I was out yesterday because of a personal matter, so the PPI data also came mostly as expected, just a little bit warmer than expected. And then, of course, the CPI the prior day came out hotter than expected overall. In fact, the month over month was a fair amount hotter than expected. So when you see the inflation coming through, what you would expect is, okay, we're not ready to cut rates yet. Inflation's a little bit high. We need to keep rates, quote unquote, higher for longer. That is the wisdom when you see a hot CPI. And the PPI data didn't help either, right? It kind of stays along with that narrative, quote unquote, higher for longer. So usually what that means is strong dollar. But as the charts are telling us right now, strong dollar might not be the order of the day. Let's see here. Let's go to the Dixie, and this is the dollar compared to other currencies. And going back to this whole week, it's only gotten weaker. Now, it might be that on the day of those announcements, you got a little bit of a move. So you had a Thursday right here. Your PPI had a little bit of a spike as it got announced, and that spike was where it should go, a little bit upwards, but then it just kept going down. So we're not really seeing the CPI and PPI having a lot of effect. And of course, retail sales, as I had mentioned earlier, the way I had my Forex factory set up, because I had to restart my entire system, it thought I was in a different time zone. I thought this retail sales wasn't happening until 8:30 a.m. Unfortunately, it just happened right now. So I had set up a trade that would have respected that last night, this morning actually, and I got kind of screwed on that one. Such is life. I guess I need to, and I usually check this ahead of time. I usually check Forex Factory ahead of time, but sometimes you wake up at, 4 a.m. and you forget to check what time your stuff is. Let that be a lesson. So let's move on as we got some comments here. Morning, Cool Cat. Good to have you. So yeah, so Bitcoin just kind of continuing the retail sales did add some bearishness. Oh, that's Dixie. Let's go to Bitcoin. The retail sales on Bitcoin actually poked it up a little bit. So with retail sales data being, let's see what it says, Friday, they're weak. So this is the kind of the opposite of the CPI data. With retail sales being a little weaker, it's a pretty big disparity month over month. Instead of zero point 0.2, which was expected, actually was down 0.9. So that's a pretty decent sized disparity that kind of says economy weak, right? So if you're getting economy weak from the data, then the wisdom is, oh, well, then they're probably going to cut rates, which is the opposite of what happened with CPI and PPI. So if they're thinking, oh, if the market thinks, oh, they're going to cut rates, then what you're going to get is a move over to away from the dollar into other assets, right? Because that means cutting rates, dollar weak, leave dollar, go to assets, assets rise against the dollar, and we get this little pop up right here. And these things are very difficult, I would say virtually impossible to predict. I do have some insight these days as to what might happen, with that, but it's hard. Well, King Ams, how much money can I make with my trading strategy? It depends on the size of your account. It depends on your own strategy, because we don't just give you a strategy. You develop your own. We teach you to develop your own, and there's many reasons for that. It's not that I'm greedy and I want to keep mine to myself. It's that the psychological aspect of trading is such that when you develop your own, your trading psychology is going to be strong, right? And one thing that people don't get about trading is that without a strong trading psychology, you will fail. I've never seen anybody do well with a bad trading psychology. I've seen people take perfectly good trading methods, trading, types of trading methods, and they go and trade and they haven't tested it. They don't know the results of that trading method and they fail. So we teach you to build your own trading strategy, and the amount of money you can make is going to be dependent on two things. One, it's going to be dependent on how much money you have in your account. The great thing about currency markets, and I don't mean cryptocurrency, I mean currency of like Forex currencies, things like that. The great thing about that is you can start with a pretty small account and make some decent money. You can start out with like $3,000, and depending on the success of your algo that you build, that's what's going to determine how much money you can make. The other aspect of it is you're in the markets. There's the X factor, right? And the X factor is something that it's the unpredictable nature of markets, right? A lot of times things happen that you don't expect. The market is a living, breathing thing. So even if you trade perfectly, an event can happen in the market that knocks you out of your trade, or it takes your trade in a direction that was even better than you thought. I mean, there's a lot of things that can happen there. So really, your success working with Algo Factory is going to depend directly on your work ethic, your ability to take in the knowledge, your ability to do the homework. This isn't just, hey, come on, use my method, follow my trades. Like, we're not that kind of situation. We actually teach you the inside of the market. We teach you how to build your own trading plan. And then once you've done that, you're going to have a number called expectancy. And expectancy will tell you how much you can win on each of your trades on average. And then that's going to be a guide. It's not, it doesn't tell the future because nobody knows the future, but it gives you an idea of how much money you can make. So come on in and see what you think. We're going to double our prices pretty soon. That's, I think, the agreement we've come to. We're probably going to double Algo Factory's fee to work with us, and that's going to happen. I think it could happen as soon as next week. If you do come on in before that, you're going to see, you're going to have the ability to possibly, I mean, as long as you don't let your membership lapse, you can keep the $49.99, right? So if we double it, before we double it, you get to keep the $49.99 price. And I know I've been talking about that for a while, but we just wanted to do this right. So I took my time to make it happen the right way. So let's go ahead and move on. We got Solana, like a lot of other crypto. This one here is showing. See, I thought Solana would be like Bitcoin and dip a little further, but it's more gone sideways, and that's encouraging. Now, we talked about Bitcoin, back to that really quick. We talked about Bitcoin possibly dumping down a little lower, right? If we go to a higher time frame, Bitcoin could easily move down to $83,000 or even 87. That's possible, but with the market being so quiet, it's going to take a fair amount of force for price to head down in that direction. And we're in the bull market, so we have a lot of very important people buying Bitcoin. It seems like the demand is high. So if price were forced down in that direction, it would probably have to be via an exogenous shock, which means something happened in the market, not something happened with Bitcoin. That's probably what would happen there. There's always that chance that the important people or whatever it is make that something happen that causes Bitcoin to fall. That's very possible. Those things do happen. I know they may, sounds like a conspiracy theory, but it's just the way things work in markets. So understand that Bitcoin could make a move down. It could go down to zero. Technically, it probably won't. I doubt it'll do that at all. It'd be extremely surprising. But we need to keep a possibility that we see a 30% pullback, which would take it to 74,000. Because we've only seen one 30% pullback this entire bull market, right? So we can go back in time here on the charts, and we can see that Bitcoin, I think it was last year, made a 30% pullback, and that happened from the peak in March, and that ended in August, and there was a 35% pullback. Really, I think it's like 30, 35%. So we did see that once, but post-halving, we usually get a 30% pullback, and we haven't quite seen that yet. Post-halving, we have seen what is this? 17%. That's pretty substantial, but I'm really a 30% pullback from the highs is expectable. And like I said before, 30% is about 74,000. So 74 is something that we need to keep an eye on as a possible washout before price continues up. And I do think they are going to take it higher, but I think that people have been kind of making money a little too easily, and they need to wash out the leverage in the market. So that's what I expect in those markets. As to the indices, they're doing great. I did predict that they would do fine, and they have done fine. The Dow Jones is up and touching its all-time. I'm sorry, the SP 500 is up, touching its all-time highs, even better than I expected. The Dow is not quite performing as well as the SP 500, but I did expect price to go a little up and sideways. It actually doing better than I thought it might. It's been able to grab a little bit of bullishness, but certainly staying above the area that I thought it would stay above. And then you have the NASDAQ, which actually is doing a lot better than I thought. I did have a contingency for it to head up, but I really thought it was going to head down. So the indices are actually holding on really nicely this week. So we're going to take a look at the Forex charts and the precious metals charts over at the Algo Factory Private Live Lab. So I know I gave the spiel already, but the key to successful trading is trading psychology. And of course, you got to have a good trading method. We teach you how to build your own trading method, right? And that's where we differ. You go to these other companies and they're like a signal room, and they say, hey, take this trade, follow our trades. Or they say, here, use our trading method. And almost every time, I hate to say this, but almost every time it's going to fail. And the reason it's going to fail is because you're not, it's not your method, right? It's not your trading method. You didn't build it. You don't know. You didn't build that. You don't know what the result is going to be, right? And that's kind of the trick there. If you didn't build it, you don't know what the numbers are, you don't have any idea what the performance is, then you're going to run into trouble. So that's what we do is we teach you how to build it, and therefore you have that edge. You know what the number is going to be. You're not going to jump out just because you lose a couple trades in a row, and that really is the key to it. So come on over to algofactory.tech. Learn to trade like a hedge fund pro. So, that's just how it is. That's how the hedge fund pros trade. Is they have a method, they test it, they know the numbers, they stick with the plan. They don't just jump out because they lose a trade or two. And we're pretty darn good at predicting market path, right? So, check it out. Algofactory.tech. Never forget.
Join us or die.